Well, gang, we got through it. That was the election. Do you remember all the worry and fear we had about the market, and some people saying it's going to be a real bad thing, and some saying not so bad, and some saying maybe even good? Well, we've had a doggone good month. I believe November was one of the best months in the history of the country for November. We've had two huge months with August and November. Big things happening here in December with Tesla Motor Company is entering the S&P 500. They're the largest company ever to enter the S&P 500. $500 billion net worth, $500 billion company. That's going to, I think it'd be a net positive thing for the market. The one thing I want to share with you that I'm hearing that I take a bit of consternation with, and it's so similar to what I was hearing back in March and April when the market was going down, and you hear over and over about how the market's overvalued. That means that a stock is selling for much more than it's worth, which is not atypical for the market to sell somewhat above its worth. However, we are in a different time now. So back in the springtime when profits were horrible, sales were horrible, the market should have gone down, but it didn't because Wall Street said, hey, you know what? We're going to look at January's market to price in the stocks right now. Right now, you're hearing talk about the overvalued stocks, and the two observations I have about it. With our persistent value strategy, myself, my team, Alex, and us, we look at those stocks. We're buying stocks that are currently undervalued. So the overall market may be overvalued, but we're buying things that are valued very well. We're entering the last month here of the market, and we'll have a good bit of activity here over the next few weeks, a lot of news. Going forward, what I think we're going to look forward to are low interest rates are going to be here for some time. We're going to have a government that's going to want to stimulate the economy, and we have trillions of dollars in cash on the sidelines. I can't tell you for sure all what that means, but in the midst of all that, I do see significant opportunity, and I think it gives Alex, myself, Chris, and the staff the ability to take the tools that we have to put you in a better spot. And as always, if you have any questions, any concerns, I need to know about it. Let me give you an example. One of the people that I mentor is a young lady up in Oklahoma. I talked to her last night. Something happened in her life 3 weeks ago. And for 3 weeks ago, she'd been really wrestling and dealing with this, and it's caused her a lot of pain. We talked for about 15, maybe 30 minutes last night. It was completely absolved. I said, the mistake you made a mistake here. You waited 3 weeks to call me. Now, as my client, as my friend, if you have a concern, I want you to call me. Yeah, I can't always tell you it's going to be good news, but I can tell you I'm going to give you the straight and skinny on it. And if you're my client, I've already taken steps to get you the best way that I know in the green. So hope to hear from y'all. Have a great holiday season. Talk to you soon. Wait. I almost forgot. We're going to now review how our portfolios did on the month of November. Not just our stock portfolios, but our bonds as well. I really want you to key on how well our bonds are doing. Let's take a look at this election month and break it down in a couple different areas. That's 11/3, the day of the election, through 11/30. Bonds in the investment world are, in my opinion, kind of the redheaded stepchild. They don't get a lot of attention. I don't think that the typical manager really gives enough consideration how to get more juice out of the lemon on this one. And Alex and I, the last few years, have really been trying to do just that. And we've been very pleased the last few years. This month was no exception. The bond market made 1% on election month, and the bond strategy each one of you owns made 6.9. So that's a considerable difference. We have a growth strategy as well as a value strategy. Our growth strategy, the Olivia strategy, made 12%, and the market made 12.6. This month of the presidential election, the value stocks actually performed better than growth stocks, and that's represented in our persistent value strategy, which you made 14.5 from 11.3 to 11.30, and the market made 12. So upon reflection, what if we had let fear motivate us? So when I was advising all of my clients about what to do in the election, and I was afraid because of what I was reading, hearing, and thinking, I said, oh, Rob, Mary, let's stay out of the market because John's fearful. We would have lost money, a good bit of money, or firm-wise, it would have been millions and millions of dollars that we would have lost by not being there. And the only way we can go forward is not by biting our bottom lip, but it's by knowing more, understanding more, and having a higher intellectual quotient when it comes to managing our money. And that's one reason I hope that you watch these videos each week very diligently. Ensure these are those you can, because we're going to do better by knowing more and acting upon it. All right, it was just a few weeks' time, but it was a fun time to see how well we did. And I think we did very, very well in this very short period of time. And I'm not an eternal optimist, but I'm very optimistic where we're going. Look forward to seeing you guys and gals here soon. Again, I want to hear from you. Take care.